So, you want to learn bookkeeping. Special Journals. Lesson 1. By Dave Marshall. Special Journals Revisited. Special journals were briefly discussed in the introduction to this tutorial. In this lesson, we're going to learn more about what they are and how they're used. Special journals are nothing more than journals designed and used for recording a single type of transaction, such as receiving cash or writing checks. What makes them special? Simply that they only record certain types of transactions. How do I know which special journal to use? It's easy. The definition of the special journal tells you exactly what type of transaction should be recorded in what journal. Let's use an easy illustration that we are all familiar with, a kitchen drawer, to make my point clear. In the drawer is one of those fancy plastic dividers that is used to store your eating utensils. Your rules and definitions for storing your eating utensils are: bin 1 knives, bin 2 forks, bin 3 spoons. After washing and drying your eating utensils, you pick up a spoon. Based on your rules and definitions, what bin are you going to put it in? I know I'm insulting your intelligence. Of course it goes in bin 3. It's not any different than how you determine what special journal to use when you record a transaction. The definition and rules of the special journal tell you in what journal the transaction should be recorded in. If you recall, the steps for analyzing and recording a transaction are: 1. Recognize that a transaction event has occurred and what source documents such as sales invoices, tickets, invoices from suppliers, contracts, checks written or checks received, provide documentation proof that a transaction has occurred. 2. Understand how the transaction event affects the business, the type of transaction, and whether it needs to be recorded in the formal bookkeeping records. 3. Determine what accounts are affected and whether the transaction increases or decreases the account balance. 4. Use the business's chart of accounts when necessary to determine the account numbers that represent these accounts. 5. Use the debit and credit rules to determine if the accounts are debited or credited. 6. Determine what journal should be used to record the transaction. 7. Do it record the transaction. Let's look at step 6. Determine what journal should be used to record the transaction. How do we do this? All we have to do, based on our definitions, is determine what bin, special journal, to put our knives, forks, and spoons type of transaction in. First, let's review the definitions for the special journals. The cash receipts journal is a special journal that is used to record all receipts of cash. The sales journal is a special journal where sales of services and merchandise made on account, business's customer is allowed to charge purchases, are recorded. The cash disbursements journal is a special journal that is used to record all cash that is paid out by a business except for payroll. The purchases journal is a special journal that is used to record all purchases and various expenses and other charges from suppliers that a business has an open account with. Supplier allows the business to charge purchases. The sales return and allowances journal is a special journal that is used to record the returns and allowances of merchandise sold on account. The purchase returns and allowances journal is a special journal that is used to record the returns and allowances of merchandise purchased on account. The payroll journal is a special journal that is used to record and summarize salaries and wages paid to employees and the deductions for taxes and other authorized employee withholding amounts not discussed in this tutorial. The general journal is the record used to record unusual or infrequent types of transactions. Type of entries normally made in the general journal are depreciation entries, correcting entries, and adjusting and closing entries. C. It's really quite easy to determine what journal to use to record business transactions. A little common sense goes a long way. Remember, it's your business and you could, if you had a special need, design your own special journal. General ledger, control accounts, and subsidiary ledgers. Hopefully by now you know, the general ledger is a special record where each account that we want to track and keep up with has a separate page or pages. This book record is organized into major sections just like the accounting equation that we studied in my introductory course. Do you have any idea what these sections might be? Come on, this question is not that hard. The general ledger's major sections are assets, liabilities, owner's equity, revenues, expenses, and draws. Simply stated, a general ledger is just a book containing the summarized financial transactions and balances of the accounts for all of a business's assets, liabilities, equity, revenue, and expense accounts. How the pieces fit together. In addition to special journals and regular general ledger accounts, we also use some additional supporting records. Special General Ledger Accounts. Control accounts. A control account is a general ledger account that provides a summarized balance of the detailed balances of the individual records maintained in a subsidiary ledger. Special General Ledger Accounts. Control accounts. A control account is a general ledger account that provides a summarized balance of the detailed balances of the individual records maintained in a subsidiary ledger. General ledger control accounts only provide us with total amounts. The accounts receivable control account provides us with the total amount that customers owe us. The general ledger accounts payable control account only provides us with the total amount that we owe to suppliers. Subsidiary ledgers. A subsidiary ledger is a group of similar accounts whose combined balances equal the balance in a specific general ledger account. The general ledger account that summarizes a subsidiary ledger's account balances is called a control account. The subsidiary ledger's purpose is to provide detailed information about transactions that are summarized in a general ledger control account. Without subsidiary ledgers, it would be difficult without doing a time-consuming analysis to provide answers to some of the following types of questions. How much does ABC company owe us, and are any invoices past due? Every customer that owes us money, and how much? What type of specific equipment and vehicles do we own, and how much have we depreciated them? How much do we owe XYZ supplier, and are we late with any payments? Every supplier we owe, and how much? What loans do we have? How much do we still owe on them, and with whom do we have them? If we maintain an inventory of products in our business, how many of XXX product do we have on hand, and what is its cost and selling price? How much have we paid Joe Blow this year? Can your business easily provide the answers to the above questions? After posting all transactions to the control accounts and subsidiary ledgers, the balance of the control accounts and the sum of the detailed records in the subsidiary ledgers should always be the same. In other words, a control account deals with summarized information while a subsidiary ledger deals with detailed information. What journal do I use? Want to make determining what journal to use even easier? I knew you'd say yes and make me work harder. The following table and chart help you to select the proper journal by answering some simple questions. They say a picture's worth 1,000 words, so I've provided 2 visual aids to aid in determining what special journal to use. What journal do I use? What journal do I use? All the special journals summarize the daily business transactions and post their summarized information to the appropriate accounts in the general ledger. All repetitive types of transactions are normally grouped together and recorded in their appropriate special journal, namely cash receipts, cash disbursements, payroll, purchases, sales, etc. In many beginning accounting and bookkeeping courses, the general journal is used as a tool to demonstrate what a journal is and what purpose it serves. Also, each individual entry in the general journal is posted to the general ledger. In the real business world, mostly summarized total amounts are actually posted to the general ledger from the journals.
Back to that old saying that a picture's worth 1,000 words. The following posting process diagram illustrates how simple the actual bookkeeping process is.
The posting process is nothing complicated. You start with a source document that is the basis for a transaction, record the transaction in the appropriate special journal, post the amounts from the special journals to the general ledger control and regular accounts, and update the general ledger subsidiary ledgers. The subsidiary ledgers contains the detail information that supports the balance in the control accounts.